While Bitcoin pauses at the key 50% level, other macro indicators are underway across markets around the globe. It seems like every single day we're seeing a new all-time high in the stock market, and this is leading to more and more risk-on investors entering this space. And this is fantastic for Bitcoin and cryptocurrencies. Today's video, let's explore the macro picture of what we anticipate for 2024. Make sure you hit the like and subscribe button. It's your home of macro cycle analysis. And if you want to learn more about it, TIA Premium is the place to go. Link is in the top of the video description. There is hours and hours of content on how to create your own trading and investing plans across crypto, Bitcoin, the stock markets, and real estate as well. Link is right there for you guys. So check that out. All right. Let's start off with some of the macro things going on out there in the market with the stock market and getting into the real estate cycle. The stock markets as well in terms of their price charts and that key movement that we are seeing as the markets continue higher into this Christmas rally. Well, the first thing I want to have a look at is the Magnificent Seven. Essentially, we like to cover the narratives. Now, the narrative we heard earlier in the year when the markets were supposed to collapse and recessions were supposed to take hold of everything was that only 7 stocks are leading the markets. Now we have the other 490 odd stocks that are also joining the forces. And we talked about this months ago while the masses were talking about it all collapsing. Now, I'm not trying to big note ourselves here because essentially it is all in the charts and it's all in the cycle. Anyone can do it. I'm just here on YouTube trying to share that information with you guys so that you don't get left behind with the other 90% of people who always lose in the market because they get strung around from one narrative to the next. So what I'm bringing you here is a look at that narrative where we now see an equal weighted S&P 500. So Apple is your big one, then you got anything else at the bottom end. They are equally weighted here. So what we're seeing in terms of the data itself is a new 52-week high on an equal weighted index. The interesting thing to note here is that when this index, the equal weighted index, cycles from a 52-week low, so essentially a year low price, to a new 52-week high, that means that you will typically see higher prices over the coming 6 and 12 months. This is a macro signal for Bitcoin. As I said in the intro, it just means that more and more risk is coming into the market. Investors are looking to take more risk, whether that's banks, whether that's hedge funds, whether it's mum and dad investors, whoever it is, they are buying and they are buying hard and fast. This doesn't mean that we go up in a straight line. As I've said in other previous videos, I think the first half of 2024 is going to be different to what we've seen now. We do have to correct and digest these extreme moves that we have seen. But the premise of the data here is that we were going to go into higher prices over the coming 6 to 12 months. So probably sometime Q3, Q4. This is the second fastest cycle from a low to a high that this index has ever seen. It's taken 33 days to go from a 52-week low to a 52-week high. So what is the data actually telling us? We've got 21 signals here. 6 months later and 12 months later, there has been a 100 and a 95% hit rate of higher prices. If you guys have been following the channel over the last 12 to 18 months, you might recall we've looked at a lot of these types of data tables like this, and then we look at the statistics to help us identify what might occur in the next 6 to 12 months. And as we saw from those lows in October of 2022, back down here, the markets, well, they've essentially been up for that period. We're looking forward 6, 12 months, sometimes 2 and 3 years. And all of that stuff that we looked at that was similar to this back then has all played out now. We are higher than what we were from October. There was another October low. Even though there was a lot of pessimism during that period, the market has continued up from that point. We had a December low, and a lot of the data back then said that the market would be higher 6 to 12 months from that point. And guess what? Well, we're here 12 months later and it's definitely a lot higher. Same deal happened in March of 2023, which was the banking crisis, and the market was supposed to collapse and all that sort of stuff. It didn't happen, and I'll show you why it didn't happen in just a moment as well. We have a new all-time high price on the E-mini futures. So we hit that yet again today over the last 24 hours. It just skyrocketed past it. So a new all-time high price, a new all-time high daily close. As for this signal here, looking at the S&P 500 equal weight index, that occurred on the 14th of December. So it's back here at this particular bar. What the data is saying is 100% of the time, which I don't like saying, but essentially that's from the 21 data points, 100% of the time in 6 months from this date here of the signal, the market is going to be higher than that price. And that price is roughly around 4,768 points. Mark that on your charts, mark that in your calendars. Have a look at how the cycle has been progressing as we've seen higher and higher lows. And this is just notes to myself. I'm saying these lows are not going to be broken in this particular cycle. And I would almost go as far to say now that this one won't be broken either. The market is not coming back to these levels. These are massive calls, and I'm not going to take them lightly at all, because many people have just throw out any sort of random headlines telling us the recession is coming and the markets are going to collapse. This takes a lot of time and learning about particular analysis, in particular Gann analysis that we teach in TIA Premium. So if you want to learn how to do this, go and check out TIA Premium. Once you understand it, it makes your trading and investing so much easier and so much more level-headed, because you can see how these markets progress and you're able to identify what is going on in the market. You can strip out 95% of the noise. So this is another massive piece of our cycle analysis. We are somewhere around this stage at the moment, leading into the peak of the macro cycle. So the real estate, the 18.6 year real estate and economic cycle. So we're in this stage here. We're seeing a lot more risk come in. And this, of course, is good for Bitcoin and cryptos as well, because this is what we need to see in the markets in order for that degenerate money to come in and pump us up. Give us that millionaire type of portfolio, the 20Xs and all that crap where we talk about, look at these altcoins, they're going to go 100X and everyone's going to get absolutely rich. That is what we want to see in the markets. Well, essentially what's happening right now to get to that stage of the ridiculousness that comes into altcoins. That's just essentially what happens in all the markets. The NASDAQ also hitting new all-time highs. Today, it actually hit a highest daily close again and a highest price in history. We just got a new all-time high price for the NASDAQ. So the massive macro signal that it's leading up to now, and it's only 1.05% away from, is the S&P 500 index. So not to get too confused with the S&P 500 E-mini futures, this is essentially the largest traded market in the world, or one of the largest traded markets in the world. This one here is the S&P 500 index. Let's not worry about that too much for now. Essentially, this one here is 1.05% away from a new all-time high. What has happened in the past in these accumulation stages for BTC, and I'm using specific points here. Now, how these are measured is from exactly the Bitcoin cycle low price, so looking at that month, to the month that Bitcoin breaks out into a new all-time high price. Within that period is what we are labeling the Bitcoin accumulation. Just for the purpose of this chart, the S&P 500 has typically done 2 all-time high prices. And I'm looking at this as a push to a new all-time high. Then there's a correction, then there's another push to a new all-time high. So we saw that in the previous cycle here, 2019, 2020. Then going back again, we saw a new all-time high and another new all-time high after that correction. Pretty decent correction in 2015. And then again, we saw it previously to that in 2012. This was just a push to fresh prices getting close to a new all-time high. Of course, after the GFC, which is why Bitcoin was created in the first place. Now, from those 2 new all-time high points, Bitcoin then goes into a new Bitcoin bull market, where for the stock market, it goes bonkers. You get just basically a straight line up for the stock market. You can see here in 2013, you can see it again in 2017, you can see it again in 2020 to 2021. And I think it's going to happen again in 2025. Absolute ridiculousness. Now, that doesn't mean it doesn't happen or start at least from the end of 2024. For the ridiculousness, because of course we know that the cycle low is in, we're talking about the crazy mania here, could start Q4 of 2024, but the real nonsense, I think, is going to be in 2025. And the nonsense is going to be there for the stock markets as well, and for real estate as we lead into this winter's curse, which is typically these couple of years here, where things go absolutely bonkers there. So this is all working in as well to a first half of 2024 potentially being a little bit more, I don't know, ambiguous, a little bit more harder to tell where the direction is. And we still might get some of the bears coming back telling us that we're going to see more recessions and the markets are about to collapse because of X, Y, Z. We're going to see all those narratives. But as you guys have probably seen by now, that it doesn't seem that way longer term. And that's essentially what we're trying to do here. We're trying to anticipate what the next moves might be by the media so that we can then clarify our own positions, our own plans, and then obviously take action on those plans of what we think is coming next. Remember, none of this is 100%. There is no guarantees in the market. There is only probabilities, and hopefully we're stacking the probabilities on our side, looking at macro cycles here. And it seems like you guys are getting the picture. I do read your comments down here, even if I can't get back to everyone or even heart every comment down here. But you guys are loving this type of content where I'm explaining the overall cycle and hopefully giving you an insight to the narratives and how they shift from one thing to the other. And this is going to be really important as we get into the later stages of the Bitcoin cycle itself, as the markets heat up and everything goes ballistic. We're trying to remain level-headed here, although I try to bring a little bit of fun and excitement into the piece. We just want to stay level-headed and remove the hype. Now, I'm not having a go at anyone in the comments, but this is the typical thing that we see when the markets get to those peaky points and they don't want to get off they don't want to get off the train because I think the train's going to keep going up forever. Not saying it's happening right now, but this is typically what happens at those points. So if you're writing these comments or you're thinking about it like that, that's okay. And maybe I'm wrong, which is okay as well. But think about what happens at those peaks themselves. I think sitting on the sidelines is more risky right now. Would rather be in it for the long run, especially with all the unprecedented catalysts coming up next month and throughout 2024. Okay, so the really scary part about a comment like that is this. This scares the absolute living shit out of me when people think about unprecedented catalysts. It's the same thing that happens in every single cycle, that there are unprecedented catalysts, and that's what causes us to remain in the market longer than we would have, I guess, liked otherwise. Now, what we need to use is the cycle itself. So although we're looking at Bitcoin here and potentially Bitcoin taking some time to pause or maybe correct a little bit from here, I'm still seeing the macro cycle playing out later in the year after the halving, and then so later in 2024 that is, and then going to new all-time highs. So the unprecedented stuff towards the peaks of last cycle was a super cycle, was ETF news. Believe it or not, it was the same shit last cycle. Was $500,000 Bitcoin is here because Cathie Wood said so. It's all this unprecedented BS that comes at the peaks, and it comes in the form of long-term cycles, and it comes in the form of shorter intermediate tops as well. And this is the sort of stuff that catches us off guard, and we might not see it the first cycle. Maybe the second cycle we see it, but we can't believe it that maybe this time is different. And then it's possibly your third or fourth or fifth time that you see it and you go, it's the same crap over and over again. Unprecedented catalysts, yada, yada, yada. But really, it is an unprecedented catalyst this time. And if you're not seeing it, it's unreal. You're getting it wrong. Okay, we get it. But if you guys want to see it, then that's what I'm explaining here because of the other previous cycles. And we see it every single time in every single market. I know I'm banging on here like some old person and giving you a boomer rant. Up to you. Take it or leave it. We see it every single time at peaks of the market. And remember, tops have to be formed on good news, just like bottoms have to be formed on bad news. Do you guys remember back at the lows, FTX collapsing? They thought the markets were going to go even lower. They didn't. The same deal, the banking crisis. There it is there, higher lows. All of the markets did it, all around the world. Everything was going higher lows on this bad news, and potentially the same sort of thing will happen on the good news when the markets come down. It's the same sort of thing. I've got something to get through in that on that particular point for ETH in a moment, if we can get through all the news here. So how could Bitcoin drop off in the short term? Because we are looking at the macro here, and I'm still saying macro is going up, but there typically is some sort of corrections. ETFs, is the hype as big as they're saying it is? Maybe, maybe not. Well, we're saying here, at least from their analysis, and we're looking at the analysis here from the ETFs, revealed that the registered investment advisors have limited Bitcoin-related offerings. Most of the advisors would prefer an ETF option, but they're anticipating that 5 to 10% of clients would own a Bitcoin ETF by 2024, 2025. It's a pretty decent number, but maybe it's not enough. Maybe it's only 5 to 10%. And then we can see that a year from now that they're actually start to get into the market. So we could see the hype up into the announcement and then the market plateau and then basically drop off in terms of timing. That could give us our intermediate top. Industry watchers pin down possible Bitcoin ETF approval dates. Sure, we're at December 1st here, but remember, we just want to look at this in terms of dates. The main thing here is the dates they're looking at is around January 10th. So it's between the 5th and 10th. Things might change, but essentially, if we look at that towards BTC, where does that come in? I think I've got it here. 5 weeks from the peak takes us to roughly the 8th to the 10th of January. So you're starting to put this together. Maybe we can get up to 48, but maybe we can get a little bit of a correction as well into those dates of January. I suspect if that does happen, we'll probably continue on for a little bit longer in terms of the down. Nonetheless, what's happened in the past, Bitcoin has peaked in the past at this first rally into the 50% level, and then it's taken 7 to 13 weeks in the case of 2019 to basically cool off and then drop out of the distribution stage. So the distribution level up there. The previous cycle here, in 2016, you had the peak, then you had 7 weeks at the low here as the market dropped off, and then you had another several weeks before the market broke out on the October bar there, basically from that top, gave you a higher swing top, higher swing bottom, and that is another key signal that the market's ready to get going again. There's your 50% breakout, and then it was on for young and old into the top. So we still have the halving coming up. I think we still have some sort of pullback, but the macro is still in play from everything that I showed you earlier about it all playing out for the S&P. And essentially, if that happens to the S&P, well, then that takes a bit of the spotlight off Bitcoin and cryptos and so forth. You know, that's how the markets continue to work in terms of their narratives. Now, to Ethereum. And if Bitcoin drops off, the cryptos are going to drop off. That's what I've been talking about for a while. Tops take a while to form, just like bottoms take a while to form. We talked about the lows here from June through to December of 2022 for Bitcoin. And of course, the markets are well and truly up from that point now, but it took a long time. The tops usually can be a little bit quicker, but they don't happen overnight. So it is going to take some time, especially you got to sort of cool off all of this sort of stuff here that's happening in the market. A lot of people agreeing. Whether these are scam comments, I don't know. For cryptos, altcoins, and in this case, we're using ETH as the example, looking at ETH potentially correcting from that point. If it corrects, it's important not to get too swept up in how far it corrects. And although I think it will potentially correct, and it has started from that 23 top down to 21, I think targets like this are ridiculous and they're probably going to get you burnt again. Nothing against Peter Brandt and his, well, I guess I'm disputing the analysis, but not against the person itself. But for this to go down to $650 or even to $1,000, it is missing the mark of a lot of what's already happened in the market. So the targets here are $650 to $1,000. This is the post here on Twitter. So I'm giving you a lot in this video, just looking at the big macro picture. And then I broke it down to an intermediate top and what might happen next. And then I'm telling you about cryptocurrencies as well. So in terms of what some of the downside targets are if we turn around, because that's going to be a massive one. So you're going to see fundamental stuff come up. Ethereum ETFs face further setbacks. Here's what's causing the delay, yada, yada. You're going to have some sort of reason from the media telling us why they have to go down. That's just normal. Everyone wants to know why. But if they just followed a chart, they probably wouldn't get so screwed and they wouldn't waste so much time with headlines that just continue to lead people astray. Now, you might be wondering, well, Peter's following a chart and you're following a chart. Why are you coming up with two different answers? Well, that's the game of life. We can basically have the chart itself, the data is all presented right there, but how we interpret it sets us apart. So that's up to you and what you use. For me, what I'm seeing in these markets and what we use that very small percentage of people in the entire world use is a land cycle. This is what we teach here in TIA Premium. And if you can understand this, then the whole world opens up to you when it comes to trading and understanding investment markets as well. So we've had 3 massive events for Ethereum. We had the DeFi collapse, the biggest event for Ethereum, because there was a lot of DeFi on ETH. The DeFi collapse has put in the low for ETH. Then we had the FTX collapse. It put in a higher low for ETH. Then we had the banking collapse, which was barely anything For Ethereum, that was more of a fundamental thing going on in the US banking system, but it was very localized in the US banking system as well, which is why you've seen the markets go up and why you've seen real estate go up in the US and the UK and Canada and Australia and your Western developed countries. You're seeing that go up, and you're seeing a lot of stock markets hit new all-time highs. This is why. This is why the majority of people miss it. And unfortunately, 95% of people just do not make money and potentially lose a lot of money in the markets. So DeFi collapse, FTX collapse, banking collapse. For ETH to break down past these levels and hit these targets of $1,000, which is underneath the FTX low, and then 650, which is all the way down here, you'd have to have an event that is worse, combined together, worse than the banking collapse, worse than the FTX collapse, worse than the DeFi collapse, put it all together, and you have to have something worse than that. Now, it can happen, but what do? We're trying to put the probabilities on our side, and the probabilities of all of those events lining up at the same time is pretty rare. I can still be wrong. I need to respect that I could still be wrong. And then maybe there is a flash crash of some sort. I don't know, but I don't like the probabilities of that. So I'm going to go with the chart and what I'm seeing with support and resistance, as opposed to what my other counterparts have when they are looking at their own charts. I think it's probably unlikely that we will take out those lows there. Let's stick with the banking crisis low as a key level here. I don't see it going below that $1,100. The next thing we can look at are corrections to the downside. So if you're looking at any altcoin correcting, have a look at what it has done in the past. Going from the DeFi collapse to a bounce up to $2,000, then down to the FTX collapse, it did 47% down. Then it did, just for a banking collapse, it did 21%. So that was a massive scare. Then from the peak in April, let's go all the way down to the drop in October, basically September, October. And that was the Binance news, all that sort of stuff that was coming out. Plus the S&P 500 and the stock markets were also crashing for that 3-month period. There was a lot of negativity going on. It still put in a higher low, and it was a 29% drop. So the worst thing, if this is the top, let's have a look. 47% takes us roughly about $1,260 odd. We would touch the banking crisis, but I suspect if it was to happen, we'd probably bounce up and have a higher close. This could happen. But what might be more likely, maybe we come back to a 30%, which you've had a 29, so call it around 20 to 30%. 30% would take us back to about 16 or 1700. So if we use our 50% tool top to bottom, guess what? It comes bang on 50% as a correction on the Gann tool. So the 50% of the range, not 50% drop in price, but of that range, dead on that 50%. So for a bit of fun, I'll throw it out there. I think it is extremely unlikely that either of these targets will be hit, and potentially, a worst case scenario is somewhere around the 30% down to about a 45, 47%, down to that sort of 12, 1300 range. So somewhere between your 12 and 1700 is a more likely target, I think, for a correction on ETH. Don't take my word for it. Do the work. Have a look at some areas that you'd be comfortable at, because I think we are in the midst of a potential correction here, and this is going to be one of the best buying opportunities that we have before we go into that crazy manic stage. Now, I've got heaps more that I could cover and spend a lot of time on here, but I won't hold you up any longer. Thanks again for your support. Like and subscribe. Links in the video description. There is TIA Premium, and there is 0% fees when you use your credit and debit card for BitGet. Limited time only. It ends on the 21st, so get in ASAP if you're looking to do that. Thanks again, guys. I'll see you at the next video. Until then, take care and peace out.